It was an unremarkable Wednesday when a 68-year-old man in Ohio sat down at his kitchen table and looked at the same Social Security deposit he had been receiving for 3 consecutive years. The number never changed. There was never any reason to question it, until his son proposed something straightforward: a 5-minute review of his earnings record through the official online portal. What they discovered were 4 separate years where the figures on file bore little resemblance to what he had actually been paid. They completed one correction form together. No attorney was involved. No fee was charged. 8 weeks later, his monthly deposit rose by more than $280 and stayed there permanently. No one had ever told him that record was accessible to him. No one had ever suggested he look at it. That is the entire basis of this video. There is one record the Social Security Administration will never prompt you to verify. There is one category of error they will never identify and flag on your behalf. And there is one form that exists specifically to correct it. If you are 60 or older, submitting that correction can lawfully increase your monthly deposit for every month you receive benefits going forward. Not a temporary adjustment, not a one-time payment, a permanent increase built into your benefit calculation. And the agency has no requirement to tell you any of this. Subscribe to Retirement Watch USA and turn on notifications. Every week, this channel covers the financial rules, forms, and deadlines that matter directly to seniors, the ones the government is not obligated to explain and generally does not. How your monthly benefit is actually built. Your Social Security payment is not derived from a single number assigned to you at retirement. It is constructed from your complete earnings history, every year you worked, stretching back to the very first job you ever held. The Social Security Administration pulls your 35 highest earning years, adjusts each one to account for decades of inflation, averages them together, and runs that adjusted average through a benefit formula to arrive at your monthly payment figure. Every dollar you receive each month connects directly back to that earnings record. This means that if even a single year on that record is incorrect, showing a fraction of what you actually earned, or showing no earnings at all during a period when you were employed full-time, your entire average is dragged downward. Based on your earnings level and which specific years contain errors, one inaccurate year can reduce your monthly benefit by anywhere between $50 and more than $100. Across a full calendar year, that amounts to $1,200 or more in payments you should have received, but did not. Across a 20-year retirement, a single incorrect year quietly removes tens of thousands of dollars from your total lifetime benefit. If 2 or 3 years contain errors, the financial damage compounds with each one. The SSA will send no notification, no letter arrives, no system-generated warning appears in your online account. The error simply sits inside your record, silently reducing every payment you receive, until you personally open that statement and examine it line by line. The 4 groups most likely to have money sitting uncounted on their record. 4 specific groups of people face a meaningfully higher likelihood of errors on their earnings record right now. If you recognize your own situation in any of these descriptions, reviewing your record is not something to postpone. It is something to do this week. The first group is anyone who worked for a small business at any point during the 1970s, 1980s, or 1990s. Payroll processing at small operations during that era was frequently done by hand. Paper ledgers, basic accounting books, and handwritten records were the norm rather than the exception. Reporting mistakes were far more common than they are in the modern payroll environment, and they almost never got caught because no one was systematically verifying them. If your career included years spent working for a small shop, a neighborhood business, a family-run company, or any employer where payroll was not handled by a dedicated accounting or HR department, your record carries a higher than average probability of containing at least one inaccuracy. Daniel's situation illustrates this precisely. He spent 4 years in the early 1990s working for a small landscaping company. Consistent employment, regular paychecks, nothing unusual. When a family member eventually encouraged him to pull his Social Security statement, he found that those 4 years reflected earnings at roughly 55% of what he had actually been paid. The business owner had processed payroll manually each year and submitted incorrect figures to the SSA each time. Daniel filed a correction backed by his old tax returns, and his monthly benefit increased by more than $280. Money that had been miscalculated and sitting uncollected for nearly 3 decades was recovered through a single form. The second group is anyone who was self-employed, operated their own business, worked as an independent contractor, or took on freelance work at any point in their career. Self-employment income is reported through Schedule SE, which is attached to your annual Form 1040. That process carries significantly more potential failure points than standard W-2 employment does. A year where self-employment income was submitted incorrectly or not properly recorded by the SSA can produce a 0 or an artificially low figure on your earnings record that permanently reduces your benefit calculation. If you worked for yourself at any stage of your career, even for just a few years, give those specific years your closest attention when you review your statement. The third group is anyone who changed employers frequently across their working life. Each new employer represented a fresh opportunity for a payroll department to enter your Social Security number with a single digit transposed, to record your name incorrectly, or to attach your reported wages to the wrong earnings record entirely. When that happens, your income was reported to the SSA, it simply was not reported under your identity. The more employers you work for over the course of your career, the greater the number of transitions where at least one of these errors could have occurred. Pay particular attention to transition years, the calendar year in which you left one employer and joined another, when you open your statement. A year that shows unusually low earnings relative to what you know you worked deserves a closer look. The fourth group carries the heaviest financial consequences and receives the least attention. This group includes anyone who changed their name at any point during their working life without promptly updating that change with the Social Security Administration. When the name submitted by your employer does not match the name attached to your SSA record, those reported wages can fail to connect to your file at all. They remain inside the SSA system, assigned to no one. Real employment, real paychecks, real contributions, simply uncounted in your benefit calculation. This situation occurs most frequently with women who change their name following a marriage or a divorce. If you changed your name at any point during your working years and have never specifically confirmed that the earnings reported under your prior name are correctly linked to your current record, open your statement and examine the years surrounding that name change before anything else. Subscribe, like, and share this with someone who needs to see it before it costs them. Why the timing matters specifically right now in 2026. This is not a correction you can file at any point indefinitely. Federal law establishes a specific window of 3 years, 3 months, and 15 days from the end of a taxable year, during which earnings for that year can be corrected through the standard process. The legal reference for this window is 20 CFR Section 404.802. For 2022, wages, that standard correction deadline fell on April 15, 2026. That date is already passed. If you have identified a discrepancy in your 2022 earnings, the standard filing window is now closed. However, 3 exceptions remain available that keep the door open beyond the standard deadline. If your employer submitted their wage report to the SSA late, the window remains open. If the SSA itself made a clerical error when recording your wages, the window remains open. And if you filed your 2022 federal tax return on time, and that return reflects earnings that differ from what the SSA currently shows on your record, that filed return can serve as the basis for an exception claim. Each of these exceptions must be pursued directly with your local SSA field office, and every additional week of delay makes the process harder to navigate successfully. For 2023, wages, the standard correction deadline does not close until April 2027. That window is fully open right now. When you sit down to review your statement, start with 2023 and work backward through any prior year where the figures appear lower than what you actually earned. The form, and the 2 mistakes that end most correction requests before they are ever reviewed. The form you need is called Form ssa.gov, the Request for Correction of Earnings Record. Write that name and number down, ssa.7008. There is no fee to obtain it and no fee to file it. You can download it directly from ssa.gov, pick up a physical copy at any local Social Security field office, or call 1-800-77-21213 and request that a copy be mailed to you. The form asks for your personal identifying information, the specific years where you believe the record contains an error, and the correct earnings figures for those years. It is straightforward in its structure, but 2 specific errors cause the majority of correction requests to fail before a single reviewer ever looks at them. The first error involves the submission method. The SSA does not currently accept Form SSA 7008 through online submission for the majority of correction cases. Logging into your account and uploading this form digitally will not work. The completed form must be mailed directly to your local Social Security office or delivered there in person. If you choose to mail it, use certified mail with return receipt requested. Record the tracking number before you seal the envelope and store it somewhere you will be able to find it. Send only copies of your supporting documents and retain every original in your own possession. The second error is the one that ends legitimate claims permanently. Form ssa 7008 requires your handwritten signature. A typed name in the signature field does not satisfy the requirement under SSA processing rules. A form submitted without a handwritten signature is treated by the agency as though it was never filed. If you mail an unsigned form close to a correction deadline and the SSA returns it to you after that deadline has passed, your window closes and cannot be reopened. Before you seal the envelope, open the form back up and visually confirm that your handwritten signature appears where it is required. This single overlooked detail has permanently ended correction claims that would have otherwise produced meaningful, permanent monthly increases for the rest of someone's benefit life. What to do when your original documents no longer exist? A large number of seniors never pursue earnings corrections because they believe that without original W-2 forms or old tax returns, they have no case to make. That belief is factually incorrect, and it is quietly costing people money they have already earned and are legally owed. If your original documents are no longer in your possession, two retrieval paths exist that most beneficiaries have never been informed about. The first path runs directly through the SSA. The agency can retrieve copies of W-2 forms going back to 1978 at no charge, specifically when the stated purpose of the request is correcting an earnings record. When you contact the SSA for this purpose, use this exact language. I need W-2 information retrieved for the purpose of correcting my earnings record. That specific phrasing activates the retrieval process at no cost to you. General requests phrased differently may not trigger the same response. The second path runs through the IRS. Form 4506-T, the request for transcript of tax return, retrieves your wage and income transcript directly from IRS records free of charge. That transcript reflects what your employers reported to the IRS under your Social Security number for the years in question. The SSA accepts this transcript as valid supporting evidence in the correction process. The absence of original paperwork does not close your case. It redirects you toward a different and equally valid evidentiary path. The exact steps to take right now while the 2023 window is still open. Step 1. Navigate to ssa.gov and log into your My Social Security account. If you do not yet have one, create it. The process is free and takes approximately 5 minutes. This account is your direct access point to your complete earnings history. Step 2. Open your Social Security statement and locate the earnings history section. Go through the figures year by year and compare them against what you know about your own work history. Flag any year that shows earnings noticeably below what you were actually paid. Flag any year that shows zero earnings during a period when you were actively employed. Flag any year that appears to be missing from the record entirely. Step 3. For any year where you identify a discrepancy, download Form ssa.7008 from ssa.gov and complete it fully. Write a concise cover letter, 1 page is sufficient, that clearly describes the specific discrepancy and the years it affects. Attach copies of any supporting documentation you have gathered. Sign the form with your handwritten signature in ink, then mail the entire package by certified mail with return receipt to your local SSA office, or deliver it in person and ask the office to copy your documents on the spot so your originals never leave your hands. Step 4. Track the status of your correction actively. The majority of cases reach resolution within 10 to 90 days of submission. If 90 days pass without any response from the SSA, call 1-800-772-1213. Have your certified mail tracking number available, and ask the representative for a specific status update on your correction request. The Social Security Administration is not withholding this information with any intent to harm you. They are simply operating within a system that places no legal obligation on them to proactively surface these errors for individual beneficiaries. That distinction is worth holding on to. Your earnings record is yours to access at no cost. The correction form is yours to file at no cost. The document retrieval tools available through both the SSA and the IRS carry no fee. The money sitting inside a miscalculated benefit belongs to you. It has belonged to you since the day those wages were earned, and it has been quietly excluded from your monthly payment every single month since the error was first recorded, until the day you open that statement and find it. Nothing stands between you and a permanently higher monthly deposit except the decision to open that statement and check it, 1 year at a time. If this was useful to you, please subscribe, like, and share it with someone who needs to hear this before it costs them another month.